Okay, Stani Kulechov, GM, welcome.
GM.
Thanks for joining us. Let's talk all things Aave, big name in our space. We want to ask you about all kinds of news, recent moves, but let's just start this way in a macro sense. Have to talk about the current environment. We're in a pretty brutal bear market. It's not just crypto, of course. It's the broader economy, it's stocks. But what do you make of where we are? What's your outlook for crypto over the next few months or year? What's it going to take for things to come roaring back?
Yeah, we definitely are in quite interesting times at the moment in the crypto space. I personally have always looked into crypto or whatever I've been working on, mainly from the technology innovation and also adoption standpoint. So I started to participate in the space. I think it was roughly almost 7 years ago, and mainly from a builder perspective. So that back in 2016, 17, I was mainly doing different kinds of proof of concepts, what you could actually do when you are using blockchain and how you can create interesting financial primitives. So at that time, we really didn't have anything much going on the Ethereum ecosystem. So the concept of decentralized finance didn't exist then. But what existed is this ability of actually having a blockchain and virtual machine, a computer inside of the ecosystem, which can actually compute and you can build different kinds of applications. So at that point, the tech was very early, and we started to create different kinds of proof of concept. So looking at back then and how decentralized finance has grown over the years to become an actual ecosystem of various applications, providing global access to liquidity markets in a transparent fashion without giving up custody. I think we built a lot of tech up to this point. And from this point onwards, what I'm thinking about is, so now that we have this interesting financial ecosystem, how we can get that into more adoption, how we can make stablecoins the internet of money and solving everyday payment problems, preserving value, but at the same time, how we could use the blockchain technology on non-financial transactions and how we can actually get it closer to people and to adoption. And what I have realized, no matter how much you build, no matter how much innovation there is in the space, the markets will never correlate that positive net result ever. So it's hard to predict the markets, and that's like why we usually are focusing on the technology and trying to actually have other kinds of KPIs than the markets. And I think the more we build utility, the more people come to blockchain without thinking about buying, let's say, cryptocurrencies, but actually using blockchain in traditional applications, the less we have to focus on markets as well. But for me, things are looking good from the builder's perspective.
So I want to ask about the stablecoin that you guys are launching, GHO. Give us something really high level on that. And, Dan and I have talked to a lot of people this year. We talked, and stablecoins just seem to be having a heck of a year, Things were pretty hot for them back in May, but now we're seeing more platforms either doubling down or coming out with their own stablecoins. Like, why do you think the market needs another one specifically from Aave?
Just to give a brief overview what the Go stablecoin is, effectively it's a over-collateralized stablecoin that works in a similar model as the over-collateralized DAI stablecoin. So it's a proven model of over-collateralization. The key difference is that the Aave community is using actually the Aave protocol for creating that stablecoin. So as a liquidity provider, you actually provide liquidity into the Aave protocol, and you earn on those assets that you are supplying. And at the same time, you can mint the stablecoin. So it's a bit more capital efficient way of creating stablecoins, but also it creates a bit more diversity into the Aave protocol stablecoin markets. So what's interesting is that the Go stablecoin doesn't really replace all the other stablecoins, but it's actually additional stablecoin amongst the other ones. So that's the kind of like a technical high level overview of what Go is. Mm-hmm. What I think is missing at the moment when it comes to stablecoins and what we've seen, the progression of scalability of the underlying infrastructure of the blockchain is that we are now, the Aave protocol, for example, it's not only deployed on Ethereum, Polygon, and Avalanche, but also on layer 2s, such as Optimism and Arbitrum. And these layer 2s radically decrease the cost of actually transacting and using blockchain-based security and inheriting the Ethereum security in layer 2s. So what I'm thinking and what I'm visioning is that we have first time ever actually an opportunity to get stable coins to be used as the internet money and solving real world payment problems by still using the blockchain. And I think it's a big issue because just going back a couple of months ago, I was visiting Buenos Aires, Argentina, and stablecoins are actually used to preserve value and transact. So, for example, the national currency in Argentina has almost 100% inflation, meaning whatever you earn as a consumer today, 1 year later, you have half of that value in your position, half of the purchasing power. And they use stablecoins to actually preserve value and transact. But the sad part of it is that a lot of Argentinians are using centralized exchanges when you could actually use something that is driving that blockchain security. And I see a lot of value and opportunity there.
Yeah, Stani, I mean, I know we want to get into regulation even more, but there's just a follow-up there, which is, you know, as everyone is raving about the uses of stablecoins, it also seems like regulators have zeroed in on them as the route through which to go after the entire industry. That was kind of already starting even a year ago, but then when you had the Terra collapse, I mean, even though people in crypto understand that Terra was a unique thing and it was an algorithmic stablecoin and here's why it didn't work and it really shouldn't speak to anything about the rest of the industry, I think a lot of people outside the industry, especially politicians, they saw that and they were like, oh, not so stable, you know, something that was a stable coin. I mean, that's the easy joke. Not very stable. It's supposed to stay at $1 and it plummeted basically to zero. And I think it kind of hurt things reputationally for everyone. So I guess I'd ask, you know, while people in crypto and especially DeFi are raving about, you know, everything should have a stable coin. Stable coins could be the foundation of all of finance. That's what your kind of peer, Robert Leshner over at Compound told us just a couple of weeks ago. On the other hand, I think regulators see something that they can try to go after, you know, try to make stablecoin issuers follow all the same rules banks do. So does that alarm you? Will that kind of chill innovation, or can that be okay if stablecoins are heavily regulated?
I would say like well, let's start from the fascinating part. So the fascinating part about, let's say, decentralized finance and building blockchain-based technology is that you have these open networks that you can contribute. So anyone can actually come and participate and innovate. And that's from perspective of a builder, it's really fascinating because you can actually contribute to any problem that you are specifically interested in solving and experimenting any part of the world. And when we have an open system and we're relying on open networks and open source code, it means that you can even take the Aave protocol, modify it, improve it, and redeploy it as a new piece of the software into the blockchain. The challenging part is that we see all these interesting experimentations happening, which some of them actually can become empowering financial products, empowering the whole finance space, but specifically might even empower wider consumer base.
Mm-hmm.
The challenge is that some of these protocols are built for scale the same way as we, for example, have today. We're using today the IP protocol or HTTPS protocol. We do it on a daily basis. We don't really give much of attention there. And these are internet protocols that have been existing and improving constantly. And we as internet users, we don't use all the protocols. So there's protocols that aren't working well. There aren't good piece of software as well, or they aren't efficient enough. So the thing with the decentralized finance and open source technology is that you have teams that are looking to build and scale, but also you have actually experimentations. And because it's a one big community, some of these experimentations actually might get more adoption that they should get. And you can question the actual underlying economics, and they might not be proven. Some cases proving valuable economics might take even years, and in some cases decades. For example, when we look at our economy at the moment, the Keynesian model of interventing the economy with interest rates, inflation, that's a ongoing experimentation, and it hasn't really yet proven itself either. So that's the kind of like a challenge. So there's sort of things you can actually do and experiment, but at the same time, it might have consequences. So the question is here, how to distinguish these two things apart. And the second question is that how we can actually keep the innovation flowing without creating a lot of challenges. And in my opinion, I think where a lot of value comes in is in self-governance. So the communities have to figure out ways to actually govern and understand what is actually valuable, what is too experimental, what shouldn't be deployed. Because if that doesn't happen, obviously it's the regulator's job to actually come and understand that, and create those rules. And the challenge there is that not all regulators might have the exact same amount of time as we have to research and investigate what are these financial primitives and how they work and what value they might bring short and long term.
Or not any of them, right?
Yeah, exactly.
Yeah. So I want to ask about the Stabenow Boozman bill that's been making the rounds. Like there was just a draft leaked a little earlier this week, and just to kind of catch listeners up if they've not been following it, this is a bill that lays out a framework for how the CFTC would regulate crypto, what actually is in their purview, what isn't, who would actually need to get registered with them, and to what extent. And up until recently, and some people would even say still, it just seems like there's some language in there that is basically anti-DeFi, would make it really difficult for DeFi to continue to exist in the States without, having this huge burden to register and be regulated. How much are you following that? Because like you were saying before, this all keeps growing and evolving if we have an ecosystem where people can try things and experiment and things like that. But if there's this burden where just because you write code, you've got to be registered with the CFTC and everything like that, that could really put a chill. So, are you following this bill? How worried are you about it?
I mean, end of the day, I do follow closely on things that are happening in the industry. Obviously, that's more of a line of work of our legal team and our policy. But what I think it's interesting is that, if you think about like decentralized finance as how it works today, so like it really depends on the decentralization. So for example, in the case of the Aave protocol, many of these DeFi protocols, they are governed by the decentralized governance, meaning the Aave community has to come together to make decisions. For example, how they want to change risk parameters, how they want to further improve the protocol in the future, how they want to give out grants to developers or anyone who wants to contribute into the ecosystem. So in one ways, I'm basically one part of the Aave community, but one voice in the community. And this is quite typical across many of the DeFi protocols at the moment that are scaled enough that they have a wide decentralized community. MakerDAO is another good example where there isn't a single person that can actually decide upon things. So for me, which is going to be interesting is that like how to create legislation that takes into consideration how these protocols are operating in obviously self-autonomous applications in the blockchain, but also governed by a decentralized communities. So I think like there's definitely challenges in the bill, but at the same time, I think what is a bigger issue is how do we ensure that decision makers understand how this system works and how they're governed and what is the value. And what's for me has been exciting to see over the couple of years is that like how these communities can actually, how well they're govern the software and the risk involved. So obviously the benefits of the decentralized finance, I don't know if we need to talk about them, but getting that wide transparency exposure to the whole ecosystem. So not only about what is, you can basically see how much stablecoins are minted, in which protocols they are sitting, what is the collateralization levels and across various protocols, smart contract-based execution, and eliminating that custodial risk. It introduces all bunch of other risks, but in a different kind of like a scale. So for me, what is exciting to see over the past years is that how these communities have been able to manage risk well enough. So crypto is very volatile, as we know. Like we see it all the time. It goes up and down. Yes. We even seen so-called stable coins that are algorithmic going completely to zero if they don't have good economics. So we see volatility in the space. But at the same time, what we've seen is that decentralized finance as a resilient infrastructure has been working very well. And I think people aren't talking enough about it, how actually beneficial it is. Going back to the pre-RO Capital, BlockFi, Celsius example, the DeFi protocols were the only ones where these entities were actually repaying those loans because you couldn't bend the smart contract rules. They're codified there and governed upon the community members.
Right. Like you can't call the smart contract and ask for a little bit of leniency. Like if you go past a certain point, you're getting liquidated. Like there's nobody to negotiate with.
Code is law.
Exactly.
Yeah.
You mentioned Stani DeFi governance and the positives there. It's interesting. A few weeks back, I spoke to Kane Warwick, the founder of Synthetics, and our assigned topic was DeFi governance. And he said he thinks it actually has gotten worse overall in the past year. But he then, hit an optimistic note, which was in a bear market, people will actually work on things and fix things. When everything was great and it was price go up, people weren't focused on actually fixing. It was just move fast and make more money and up only. Do you agree with that? Think that's fair? Or do you think governance has actually gotten better? I mean, there's still a lot of imperfections. There's something I like to say that, maybe it's short-sighted, but DeFi governance kind of assumes a faith in the idea of like the wisdom of crowds, that, the community, if they're deciding as a whole, then we can trust what the community decides. But in some cases, one or two people who founded something and know the most about it might be the better ones to make a decision than the community, right?
Yeah, I mean, I do definitely agree that there's like usually the early developers of a protocol have good experience of how the protocol could be evolved in the future. But in many cases, these protocols are quite optimized on the tech side of the thing. So, for example, if you look at the Aave protocol, it's been from version 1 to 2 to 3, there isn't really much things you can actually optimize. There's probably interesting technical changes you can actually make to optimize the gas consumption of the different actions, but it really is a very high-end piece of software at this point. So I think it's mainly about how to actually manage the risk more. And I think even like there are few risk teams out there in the DeFi space, and more coming actually at this point. So I think I've seen a bit more shift on that side, on the risk side, from the founding teams to community members and to risk management companies. And I think that's an interesting shift at the moment as well. But I think also there are a lot of people that care about these protocols, and they put the effort to actually learn about them. There's also development teams that actually actively find protocols to contribute into. We've seen this happen for multiple protocols, and I think that's amazing because you can, as a development team, you can go to the Aave governance, make a proposal that we want to optimize something, or we want to fix the governance, make it technically cheaper to vote, or we have a better solution. And it's open and anyone can do that. And I think that's the beauty of decentralization and governance. What I do agree with Kane as well is that the challenge is that everyone has been speed racing for the tech implementations of the protocol, the kind of like a product side. But then the actual governance is always something that comes after, or there isn't enough resources to look into it. And it's easier to kind of like take something existing and use it in your own governance model. So when we were building our version 2 governance, we looked at pretty much everything that was out there, and we tried to figure out, well, what could be those things that are actually important for the Aave governance, the Aave community, and how we can actually innovate. And something simple that even we did is that delegations, where typically you could delegate your voting and proposition power, we separated that you can actually delegate voting power to a so-called protocol politician and proposition power to someone who is creating a technical proposal. So effectively what you're doing here is that, like philosophically, you are giving your voting mandate to politicians, but also giving you kind of like a lawmaking mandate to someone who can actually like codify a proposal. And that's quite interesting. But that just showcases that we don't innovate enough as a community on the governance, and there's things to be solved. For example, how you can actually make the experience better, motivate more community members to govern, and make it more valuable. And I think what I've seen is that the delegation model is becoming more and more popular, especially because we don't all have time to contribute to read every single proposal. And some of these proposals are really technical, and they might have difficult economical changes, and it's very hard to actually follow there. So sometimes it's better to actually just give your mandate to someone who has that time contribution to do that.
Yeah. It's such an interesting idea because you have to, not everyone who's part of the community for Aave or any other protocol for that matter is a developer and understands all of that kind of language, or is, an economist and maybe has a really good understanding of what the economics of everything should be. So the delegate model has been really interesting, watching how that has played out for different projects in the community. Do you think that's how, maybe the risk thing you were talking about could work? Like if there is a risk team, then, somehow they're going to get, it would be built in that they'll have something delegated to them and it's their job to try to check things and, issue some kind of decision on how risky something might be.
Definitely. So I think what's interesting in the Aave version 3 that we launched beginning of the year is that there's effectively this role named as risk administrator. So the Aave governance can actually decide to put let's say, a smart contract logic into that function to delegate risk administration to a particular entity between certain thresholds. So you could have a risk management entity to actually governing that part of the protocol, and you can delegate different markets, different asset configurations. So you can actually even decentralize how you delegate the risk management. And I think risk management is super, super exciting field. So if I will be now maybe like, I don't know, 10 years younger and thinking of building a business on top of Web3, I think it will be something related to risk management because it's such a complex and exciting field because you actually have all the data available on the blockchain. So you see different kind of transactions happening. You can quantify the different kinds of collateral ratios and asset movements. You can quantify liquidity. It's like you have this incredible infrastructure that is verified data and it's accurate, verified financial data. So it's an incredible opportunity to create very good risk management products. And I think that's where we're going to see a lot of evolvement as well in terms of building businesses on top of the DeFi ecosystem. But also, I think we'll see also more de-risking happening. Now, the question is that will that de-risking stay for the next bull market? Because the challenge is that a lot of risk parameters are set during the upcycle of the market, but they should be dynamically reduced when the market is decreasing as well of liquidity. So that's something that I would love to see, like more long-term planning there.
It's such an interesting idea because if you think about traditional banks, it's not as though they can see the metadata of their competitors' transactions. That's never been true really until now. In DeFi, where just because you're competitors, like you can go see how all of the competitors' transactions have turned out, and then you can turn that into data that you're going to use to make your platform safer, better, more efficient. So yeah, it's a really interesting dynamic. I think that DeFi kind of adds into the way things work.
I think it's exciting because it's like when you look at Wall Street, for example, it's quite a black box. So you could gather information from financial reports that are periodic, so maybe quarterly based, annual, and also reports of compliance reports as well. But in decentralized finance, it's actually like an aquarium, right? So you have the state every single moment, verified data, and at the same time, anyone can actually look into that data. So what's fascinating that is happening now in the Aave community is that we don't only have one risk service provider, but there is another one. So there's Gauntlet that is typically done risk assessments within the Aave community and across decentralized finance. We have now also Chaos Labs. And you can actually see, because risk is something where as a space, you don't really overlap things, but you have different kinds of opinions on what is the risk and assessments. So it's now interesting to see when we start to have more of the risk entities providing risk services to the Aave DAO, actually seeing kind of like how they differentiate and what kind of choices the community will make, and hopefully better quality decisions as well. But this is why I love the space, because you might have an opinion, and someone else might come and say, "Hey, I found something. I actually found something else based on my research," and this is what makes better finance, in my opinion.
Nice. Let's talk about making certain things better, like social networking. Maybe you mentioned Aave v3. We talked about the GHO stablecoin, but other Aave news recently that we want to bring up is the Lens protocol. using, DeFi or decentralization to try to improve social media has kind of been like a long time pie in the sky ambition people have had. We just covered earlier this week the launch of Blue Sky, or at least Blue Sky launched like a waiting list, which was a Jack Dorsey project. And it's all happening at an interesting time because, Elon Musk buying Twitter, or not buying it, but maybe buying it. And I know that you like to be a crypto voice on Twitter as well. Talk to us about Lens and how that's going to work, and whether all this stuff can actually kind of fulfill its promise.
Yeah, I mean, there's an interesting path that we have taken at Aave. So we started building finance, and what we realized that we actually were building access to finance, access to market, and effectively we have been about bringing accessibility to open networks. What's interesting about the Lens protocol is that it's a social media protocol built on smart contracts where you can create your profile, and it's tokenized as an NFT. So it's verified by the blockchain, and you can follow other profiles across the whole networks, and that's secured with the blockchain as well. So the way we see it is that people have financial capital. Some of us have financial capital. So DeFi is very interesting when you can you have capital to get yield, for example, or you have value to transact. But something that every single person on the planet has, regardless, is social capital, regardless of the internet as well. So our everyday actions, what we do, the relationships we create, for example, with our peers, the people we meet, the neighbors we create, that's all social capital, and also the knowledge we obtain and share. And what's interesting about the internet is that, and Web2 social, is we effectively made it very efficient to create social capital, and also on a wide scale. So for example, today by using social media, you can actually connect to any peer in the planet, and at the same time, you can read any news across globally and share it, and share your ideas to your audience. So the big difference, what is now and what we're doing with Lens, is that we create all this social capital, but it's actually stuck in those platforms that we use on a daily basis. So, for example, Twitter. I have an audience in Twitter. I have followers there, and I can actually share my ideas, make connections, and that's the social capital that I create there. But I really can't actually take my followers or my profile and port it into another application that maybe is better experience for me, reflects my values better, or I have better alignment with. And with Lens protocol, what we're doing is that you actually, we change the dynamics in a way where you own your profile and your social graph. And anything that is built on top of the Lens protocol, actually, whether it's experience or an algorithm, you can actually have the flexibility to choose without leaving your social capital behind. And that's the biggest radical difference, I would say, or like change of the dynamics, what we have in Web2 social with Web3 social. So we're kind of like expanding the concept of, in Bitcoin, you own your money, your store of value, and with Lens protocol, effectively, you own your social capital and social presence.
Of course, like anything else, the challenge is scale, right? Like getting people to come over and set up Lens protocol or on.
Yeah, Lens. And I think the key difference here is that we have to build new things, right? So I don't think going after Twitter moves the needle, like going after Twitter audience, or let's say going after Instagram, Facebook, because they have very strong social networks. So they've been built on a principle where you can't leave the platform because all your audience is there. So you have to be there. And they have the resources to create algorithms as well to keep you there, and other perks. What I think is going to be interesting is that finding what are those new experiences and creating those new algorithms and plugging into the new experiences and building new interest graphs and getting people into those new applications, which is going to actually make the technology to adopt. So I think it's actually the applications and use cases that bring the technology further. So I don't believe seeing anytime soon Twitter becoming completely Web3 based. But I could imagine that something bigger happens on application level that is powered by Web3, where a lot of people are going because it brings them something new. And that's, I think, where the scale and adoption will happen.
So I wanted to ask about, and that's because, this episode is going to come out a few days from now. By the time it is out, you guys will have announced that you're launching this new staked ETH earned strategy through Oasis. So I wanted to ask if you could give us kind of like a very high level overview of that. And then, I have some other questions because some of the other things in here that, the idea is that this whole strategy of like you deposit your Steph, you borrow more ETH, you get more Steph, and then you can kind of do that a few times over. That is technically, that has been a pretty complex and risky strategy in the past. But what you guys are saying is that post-merge, this is now a little less risky than it used to be. So I guess let's just start with the overview because this is a brand new thing by the time people are going to be hearing it.
Steph or Steve, by the way?
I always say Steph.
It's actually, I'm pretty fascinated about the kind of like staking derivatives in the sense that because the primary use case is to secure underlying network, let's say Ethereum in this case. So we see today staked ETH being tokenized as a so-called liquid form, so as a token in Lido. Coinbase has their CB ETH as well. So the tokenization part is quite fascinating because it actually proves one of the ideas of decentralized finance where liquidity is something that moves and value could actually move across. There's always also security considerations that we need to think about always when we look at staking derivatives. And also that's the fact that, especially in the case of Ethereum, for example, it's one-way staking at the moment. So whatever goes into staking ETH in terms of value, you can't unstake it until this Shanghai improvement on which makes the staking two ways, so you can unstake, and then you have at that point most likely the ETH and staked ETH or staking derivatives will trade closely in par because of this technical improvement. I think it's an interesting way to get leverage of your position, but I think it's as a use case, it's very professional. I don't see a lot of kind of like non-professional appetite for that kind of thing. So I know in decentralized finance there is some service. Some applications that actually provide so-called vaults that automate this process and make it more exciting. I know InstantApp has something similar, DeFi Saver. But at the same time, whenever you are composing things, you're always adding risk. So that's something that needs to be also acknowledged. And I think that's something that is missing at the moment is that how do you distinguish and how do you actually understand the compounding risks involved? And this goes back to the previous discussion that I would want to, if I would be 10 years younger, I would start a risk management firm on Web3.
Yeah, still could. Don't rule it out. Yeah. Something I wanted to make sure that we ask you, Stani, we were speaking to Brandon Neal from Euler at Mainnet a few weeks back, another of the newer lenders. And he basically said, and he meant it, as praise, that there was kind of a duopoly in DeFi lending, and it was Aave and Compound. And he said, now there's more of us, and it has bred competition. But do you see it that way? And I guess a different way to ask it is, there's a lot more protocols, platforms doing crypto and DeFi lending now. So how do you make sure that even though you had like an early lead, or you were one of the OGs, that you guys remain, the place to go for that?
I mean, for what I think is personally is important is that the space is as diverse as possible, so that there's actually a lot of options for users and different variations, as long as the risks are well mitigated and there's factual community governance over these protocols. Like it's not enough that there is like a platform has a token, not a platform, I mean a protocol has a token, but actually there should be like a decentralized governance and community behind of it, making decisions and caring about what they're trying to achieve. And I think it's good. I mean, there's probably a couple of dozen Aave forks that I know that has been deployed across different networks that are working to some extent. Some of them are experimentations. So that's one thing, is what you can do is you can take the Aave protocol and improve it and deploy. But I personally see that the space is very diverse at this point, and I think kind of like these protocols as a public goods. So, for example, you don't necessarily need that many if you can come and actually have a voice in the protocol, because that is where that is where changes are happening. So if you can actually go and help an existing protocol and making better, that's good for everyone, because it's a public good and everyone can participate. If something doesn't exist, then you can create it. The challenge there is that, going back a couple of years ago, building decentralized finance was less riskier. So, building Aave version 1, we were expecting 30 million worth of TVL, ended up being $500 million worth of TVL. Version 2, we were expecting $1 billion TVL, ended up at its peak to being 13 or 14 billion TVL. So it just showcases that kind of like whatever you are doing is that in most cases it's easier to contribute to an existing protocol and become a delegator and actually push that movement or join that team, because it's public good. And if there isn't a good consensus within that community, what you can do always is to create a smaller community and fork the existing protocol and create a new path. And that's the kind of like idea of open source technology, is that you can create variations depending on what is the objective. But I think it's always good that there's more participants. We don't just see it as like competition. Like, we don't think about protocols from business mindset. We think about them as public goods and how to make better. I personally been involved also in the maker governance back in the days, commenting and proposing, and probably I will do that more across all different DeFi protocols and reinforcing them, because I think it's time to reinforce, not to create new, unless there's really new innovation, in my opinion.
I wanted to ask about something you said earlier about DeFi and this idea that, there's some very established projects in the space, but there's also a lot of experimentation happening. And it sounded like the way you were characterizing some of the projects that failed earlier this year was that, these were experiments, they were interesting ideas, but they attracted a lot more support and capital, I think, than perhaps, they might have planned to. So then when, of course, they fail, these were experimental, but they fail in a big way. And then it kind of like, the dust kind of like hits everyone in the space. So I'm wondering about like, this next iteration of DeFi, or, when we move into the next bull market, Do you think there's a way to kind of make sure that like some of these experiments don't get so big that they fail in such a big way? Or is that just kind of something that needs to happen?
I don't think it needs to happen necessarily. Like, I think that what's important is that the community is aware what an experimentation is. And in some cases, it's kind of like exists. There's experimentations like, Ampleford that is specifically trying to create a more of a internet commodity, what I remember. And then you see smaller ideas, experimentations. Like, you don't really need to kind of like experiment on a large scale, and that's definitely not the way to go. And I think you can build a protocol or an experiment in a way where it's really capped in how you can participate, in terms of like how much capital an experimentation can have, and keep it that way. I think having those kind of like a gated launches to smaller communities and making them even private, it might be interesting way to go. I mean, eventually they might be public goods and empowering. When you think about DeFi, we do think about like things like yield and how easy it is to move capital, but on the background, what has been created is kind of like a global liquidity market where everyone has the same democratic access to that protocol, same information. So you have that big information difference between peers, and you can you have guaranteed operations by the smart contracts, how the protocol works. Plus, you also have a voice in the community, so you can express your opinion. So, like, we created something very, very valuable as a whole Web3 space. But I think kind of like comes to experimentations, they need to start with better validation. And if you look at how the Ethereum community works in terms of improvement proposals, it takes a lot of time to get something done in that community. It's not because actually, it's not because there's a process, but because actually changing and making improvements into an underlying network is a big change. Even things like account abstraction that could help key recovery, help adoption, getting more users into the space and making a bit more easier to interact with the blockchain, which will be very helpful actually for Lens Protocol and Web3 Social. Those things take some time. And actually you can experiment with more on layer 2s. But the reason it takes time because there needs to be proper validation on these features and updates.
Right. It's an interesting idea because crypto is known for being just moving at breakneck speeds all the time. But, in some cases, things taking a long time, like that's a feature, not a bug. Like, I don't think people see it that way.
Tell all the when token and when coin go up people that.
Yeah. Like, think about how long the merge took, but it went off without a hitch. It did what it was supposed to do for all the years that we waited for it to finally show up.
Right. Totally. Except ETH didn't go up, so people are unhappy. Stani, we like to end on something a little more fun. So here's mine for you. It's been interesting to me, or fun to me, to see the way that like design and branding actually kind of matters in the DeFi world. And everything has like its kind of cute logo. I don't know how it happened naturally, but it ended up being animals. You've got like the frog, and you've got the Uniswap unicorn, and the Aave ghost, and
there's a badger.
And the bunny swap bunny, and the pancake swap, stack of pancakes. It's like kind of fun when you scroll through CoinMarketCap and see all the little logos. But how did the Aave ghost come to be, and how has that affected how you do things? It's like your flag.
I mean, back in those days when we were branding, we kind of realized that, because the way finance work is that you have a lot of kind of like you put a lot of effort in building a conservative brand, because obviously it's finance. You're dealing with funds. other people's funds, and you have custody of their funds. And
it's serious.
Decentralized finance, serious brands. And decentralized finance, you really don't have that because it's a user directly to the protocol interactions, meaning that here's what operations that the protocol can actually do, and that's all about it, and then it's governed by community and how there's a formal process on how those changes can become active. And what happens there is that you actually suddenly, it's not about the brand, it's you have all the transparency and all the code speaks itself, so you can actually create a brand that is more reflective of the community, or being more fun, if it's easy to put it that way. So in the case of Aave means ghost in Finnish, and the idea came from the fact that when we build a protocol in the first place and it's deployed by the community, we're no longer needed. So if any person from the Aave team leaves the Aave community, takes a break, it will still, the protocol will still work. The governance will still work. There's people there voting on a constant basis, and there's developers that are creating grants from the Aave DAO and the Aave Grants DAO to provide development services to the DAO. So, and you can actually take any of the piece of the component out, and it will still function quite well. And that's what the ghost is. The new thing is that we also have Aave has the Aave parties, and we have this very nice LED ghost that we call Ronnie. So that's the Ronnie ghost. So we kind of have two ghosts at the moment.
It's
wait, and I want to ask real quick.
You want to be
end.
Ghosted.
Yeah. So the stable coin is Go. It's not GHO. I think Dan and I both said GHO. It's just Go. Okay. For Ghost, of course. Okay.
Well, the ticker is GHO.
Yeah.
Yeah. Yeah, but I think you say it Go.
We pronounce Go, yeah.
Yeah.
Oh, and then Stani, how do you pronounce Steth or STETH?
I just say staked ETH. Even when I see the STE, I just say staked ETH.
Yeah.
Nice.
I feel like the last month has been such a learning period for how people actually like to pronounce their things.
Yeah, it's a fun time. One more fun one, in fact, or I don't know if it's fun for you, Stani, but is there much of a crypto scene in Finland?
I think there is increasingly more. So we see more builders in Finland. So obviously it's as a country, there's a lot of tech there. I mean, those who remember Nokia was and is from Finland, did a lot of great phones for a long time, a lot of good tech, they build networks. But also in terms of the blockchain technology, we see more and more people coming from actually Finland. And next month, there's going to be Slush, which is one of the biggest tech conferences. And this year, they have a bit of focus on Web3 as well. So I'm going to be there. So if anyone is traveling to Finland, feel free to come and say hi. So it's interesting that blockchain is being taken more and more seriously in the tech community. And that's important because it's one of the most important technologies in our societies. So I'm super excited about that.
All right. Very cool. Exciting stuff. So we'll definitely look to see what comes out of the conference. And thank you so much for being here. I'm so glad we were able to talk to you.
Thank you so much. And if there's someone who either all of you or anyone in the audience wants a Lens profile and wants to try the Lens protocol beta, you can DM me on Twitter, and I can help you out.
Nice. That's a reward for our listeners who stay all the way till the end. That's
you
great.
made it to the end. This is your reward.